It's Wednesday, February 5th, and you're listening to the Stock Market Daily News Podcast, your essential 2-minute recap of yesterday's market action and what it means for investors. U.S. indexes saw turbulence on Tuesday. The S&P 500 held steady, the Dow Jones inched lower, and the Nasdaq edged downward as Wall Street digested earnings, crypto volatility, and global trade headlines. The big story? Bitcoin's continued slide and a fresh wave of sector rotations reshaping risk appetite across the market. Plus, India's market surges after a landmark U.S. trade deal, while new hedge fund launches grab Wall Street's attention. Here's what you need to know about the market landscape right now. First up, let's talk cryptocurrency. Bitcoin is facing what some are calling an existential crisis. The cryptocurrency dropped to as low as $73,000 on Tuesday, its lowest level since late 2024, after the Federal Reserve's new chair signaled a hawkish stance. While U.S. equities have rebounded recently, Bitcoin has diverged, weighed down by delays in crypto regulation and fears of large institutional selling. Some strategists even warn of a possible slide toward $40,000. For investors, the takeaway is that crypto volatility is rippling into risk assets, pushing traders toward safer sectors. Switching gears to crypto stocks, ARK Invest made headlines by buying approximately $19 million worth of shares in crypto companies, including Coinbase, Robinhood, and Block, amid continued losses. While the crypto sector remained under pressure, ARK's move signals its strategy of buying the dip when sentiment sours, especially as Bitcoin and related stocks are hammered. This bold play highlights the conviction trade, but also underscores just how shaky the outlook remains for crypto-exposed equities. Meanwhile, Bitcoin mining stocks bucked the broader trend. Despite Bitcoin itself down about 4% in January, U.S.-listed mining companies rallied, with the group's market capitalization rising 23% last month. J.P. Morgan says this move was driven by lower network competition, thanks to winter storms shutting down mining sites and fresh AI optimism as some miners diversify into AI data centers. The lesson? Even in a weak crypto environment, sector rotation and company adaptation create standout winners and losers. Turning to global equities, Indian markets staged a major comeback on Tuesday, rebounding sharply as a landmark U.S.-India trade agreement and strong earnings offset last week's post-budget sell-off. The Nifty index reclaimed key technical levels, with highlights including BPCL increasing its capital expenditures by 35% and Bajaj Finance seeing a 6% drop in headline profit, but underlying growth after one-time charges. For global investors, India's bounce signals renewed interest in emerging markets amid shifting trade dynamics. Lastly, on the hedge fund front, buzz from Morgan Stanley's Palm Beach conference centered on ex-Sequoia investor Jeff Wang's upcoming Ognition Global Investors Fund, expected to raise at least $1 billion. The industry is watching closely as new funds debut with bold strategies and deep pockets, a testament to ongoing innovation and risk appetite in alternative investments. To recap, the S&P 500 finished the day flat, with the Dow and Nasdaq both slightly down. Bitcoin crashed to multi-month lows, leading to ETF outflows, but new institutional positioning, while select crypto miners and Indian equities showed resilience in the face of volatility. Looking ahead, keep your eyes on more corporate earnings, updates on U.S. inflation due later this week, and ongoing Fed commentary, all key drivers for market sentiment. For daily market insights, subscribe and join us tomorrow for another fast, actionable roundup. Thanks for tuning in.